Hi, I'm Tied Down.
And I'm Cast Off.
And welcome to today's coverage of the 2012 Summer Accounting Olympics.
The game should be extra exciting this year because the FASB has issued many new pronouncements.
And to add even more interest, the games are being held in London this year. As you know, London is home to the FASB, who was a major influence in many of these new pronouncements.
Right you are, Ty. It is going to be exciting. So let's go live to our first event, the Javelin Throw.
This event will focus on the new requirements under FASB Update 2011-02 with regard to receivables. Specifically, this update relates to accreditors deciding whether a restructuring is in fact a troubled debt restructuring.
And with the poor economy we're experiencing, let's face it, debt restructuring is on the rise.
So let's join our announcer on the field.
Why is this update necessary?
Well, a creditor will need to determine when they have actually granted a concession and if the debtor is experiencing financial difficulties.
And so this update will provide guidance?
Absolutely. And thus, it will provide the guidance necessary to determine if the restructuring is, in fact, a troubled debt restructuring.
Well, thank you, and good luck in your event.
Thanks.
So there you have it. In order for a creditor to consider a restructuring as a troubled debt restructuring, they must conclude that there is a concession and that the debtor has financial difficulties.
A concession may be indicated by the fact that the debtor cannot get funds as low as a rate as the creditor is offering.
Oh, very true, very true. Of course, other factors will have to be considered as well.
And a simple delay in payment would not be a concession.
Oh, it looks like he's about ready to begin. This performance should also give some examples of when the debtor is having financial difficulties.
And there's the throw.
Wow! Look at that! We're clearly seeing some financial difficulty indicators.
The debtor is in payment default.
Or is in bankruptcy.
Or has going concern issues.
Wow! It's out of the stadium!
Bloody heck!
The 2012 Summer Accounting Olympics is proudly sponsored by McDonald's. I'm eating it.
Well, he sure made a point with that throw.
Yes, and there's a lot more guidance in Update 2011-12. But now let's move on to the disc throw.
In this event, we'll look at the new requirements in Update 2011-05 concerning comprehensive income.
Now, that's a difficult topic, and this update is a direct part of the IFRS Convergence Project.
The IASB basically wants more prominence for the presentation of comprehensive income than we are currently providing.
Let's join them now at the disc throwing event.
What is the problem with the current presentation in US GAAP?
The FASB provides for 3 methods for presenting comprehensive income.
I would think that would cover a variety of needs.
True, but one of those options is to put the presentation in the statement of equity.
I really don't see a problem with that.
Well, the problem is that my training for this event has shown that it tends to get buried in there and not given the prominence it deserves.
I see. Well, good luck to you.
Thanks.
This is a major event because this update will apply to anyone who has elements of comprehensive income.
But it's also important to remember that no actual items of comprehensive income have changed. They're the same as what already exists in prior standards.
The most important point here is that you may no longer put the presentation of comprehensive income in the equity section.
So you just can't bury it anymore.
Nope. Well, it appears that she's selecting the proper disc for this event.
Wow! She sent that disc sailing!
Not only that, but it's clear that they really only have 2 options for presentation now.
Definitely. You can have a single statement or 2 separate continuous statements.
And that clearly looks like a new record.
You may be right, but one more point here. Whichever method you choose, reclassification entries will be required on the face of the financial statements.
The 2012 Summer Accounting Olympics is proudly sponsored by Coca-Cola. Great coffee taste in a cola.
Well, now it's time for one of my favorite events, and I'm sure one of yours, Cass.
You might say that.
As you may remember, Cass was a gold medalist in this event back in 2004. Let's take a look back.
Accounting in the healthcare industry has always been a challenge, and this year has been no exception. But clearly, Cass Toff has proved it can be done as she takes the gold for the United States team.
You looked good back then.
What do you mean? I look good now.
Okay, Cass, why don't you tell our viewers about this next event?
This is the computation competition and covers update 2011-06 and is related to the fee imposed on health insurers by Patient Protection and Affordable Care Act.
What's that?
Obamacare.
Oh, right.
Let's go to the event for the warm-up. The problem here is that the fee is allocated to various health insurers based on a ratio of premiums for the prior year in the industry.
I could see how, without guidance, this could lead to diversity in application.
Precisely. It looks like he's ready to begin.
Whoa! Looks like he got a little caught off guard by the starting gun, but he seems to have recovered.
He has to estimate and record the full fee liability for the year.
I assume that a deferred liability will need to be recorded.
That's right. Oh no! It looks like he's got a hand cramp.
Oh, that's going to count against him.
No doubt. But wait, it looks like he's back in the game.
Is he ever? It looks like he's beat the world record as he amortizes the expense over the period using the straight line method. Wow, was he smoking?
He took the straight line method at the end there, although he could have used another amortization method if it was better.
Well, that's so true, but it paid off for him this time.
The 2012 Summer Accounting Olympics is proudly sponsored by Taterade, the sports drink with extra starch.
Well, Ty, it's time for our last event of the day, and this is your baby, isn't it?
It sure is. The high jump.
You once took the gold in the event, didn't you?
No.
Silver?
No.
Bronze?
No, I never actually won anything. I just like it, so cut me some slack, okay?
Moving on. This event will deal with update 2011-07 with regard to bad debt in healthcare entities.
The issue here is that bad debt is an everyday event in healthcare, and there are currently comparability issues due to the related estimates.
Let's go to the field for the warm-up.
What are the problems that you expect to face today?
Well, some healthcare entities recognize income when the services are performed.
Why would that be a problem?
Because it's most likely they'll not collect a significant amount of that income, and that, of course, would result in overstating both revenue and bad debt.
Well, that seems like a pretty big hurdle for you to jump. Good luck.
Thanks.
I believe the problem here is that you should not recognize income when you don't have a reasonable expectation of collecting it.
Exactly. But in the healthcare industry, bad debt is so prevalent it can cloud the issues. Well, it looks like she's ready to go.
She's going to have to move that bad debt provision out of the operating expense and throw it up top to reflect a deduction from revenues.
And there she goes. She's in the air.
And it looks like she's going to add all those extra disclosures about revenue recognition and the assessment of bad debt.
Oh no! That's gonna cost her a few points.
Not to mention the smell when she crawls out of the Thames River.
The 2012 Summer Accounting Olympics is proudly sponsored by Meaties, breakfast of CPAs.
Well, that wraps up today's coverage of the 2012 Summer Accounting Olympics in London.
Join us tomorrow for the work paper relay and many other exciting accounting events.